Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn how to trade futures markets using the Viper tools, you are absolutely in the right place. First, we've got to get our standard disclaimer out of the way, and then we can get on with things. Okay. Okay, let's get this out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. And you do choose to trade at your own sole discretion. Okay, so here's what I'd like to do tonight. I'm going to try to use the most, how would you say, expeditious method to help everybody understand what they're looking at as far as our trading system is concerned, and the quickest way to get started in using it. Before I do that, though, I want to tell you that your success is going to stem in futures trading if you're using our tools from a couple of things. And let me tell you what they are. First of all is instrument selection. Instrument selection is critical, and I can't emphasize how important that is. So when we talk about instruments, if you're new to futures trading or you're just sort of getting involved for the first time, futures in terms of expiration dates have some similarities to options in the fact that options have expiration dates either quarterly or monthly or whatever, where they roll over to the next forward front month. Okay, so futures are somewhat similar in that sense, in the fact that, for example, here on the equities, which are ES, the E-mini S&P futures, NASDAQ futures, mini Russell futures, and the mini Dow, are all on the December front month contract. So I'm going to show you something here, and this is one thing you have to be aware of if you're going to trade futures, is that the dates that they roll to the front month will move to the next month. Gold doesn't really lead the equities. The equities tend to be a mirror image of gold, and I'll show that tonight. This is our go-to site for futures. If you're going to trade them, you pretty much want to bookmark this, cmegroup.com. And if you scroll down towards the middle of the page, you're going to see a matrix of trading instruments that looks like this. So here you can see that this ESZ9 is the E-mini S&P futures. Here's the NASDAQ futures, mini Dow, and here's the Russell. Okay, so the front month is December. So you click on this, and you can start to see, for instance, we're going to roll the equities, all those equities I showed you, the four that we trade and watch. You can see the volume starting to pick up on the March contract. And the reason for that, if you look at the calendar, is that they have expiration dates and cutoffs where the last trade occurs. In this case, that's December 20th. So you normally have to fade the last trade by at least a week. So in other words, they don't let you trade futures contracts right up to the last trade date. You've got to roll to the next front month, which in this case is March, and we're going to do that tomorrow, which is the 13th. So we're a full week ahead of the last trade. Then you won't roll that one until March 20th. And so that's how that works. The only ones that are on a slightly different schedule than the equities are crude is on January, and gold is already on February. They roll at different times. So that's a very important thing. If you don't take care of that properly, and we'll help you, you'll get notices from Ninja that'll help you. You know, you'll get flagged on a notice from Ninja. You know, to get pop-ups when you log in, it'll pop up, it'll tell you what you got to do, and we'll tell you in the live room, so you're not on your own on that. But if you keep trading up to the last, you're going to get in trouble with your broker, so you don't want to do that. Yeah, okay, so what I want to do, so instrument selection is key. I personally recommend that you start with something slow-moving like ES. And you know, when you're transitioning from sim money to live money, what is your goal? What is your goal? Okay, here you are, you're trading sim, and you're ready to trade live money through Top Step Trader or One Up Trader or your own capital. And so I'm going to put your first goal is what? I've got to put something in here. I've got to fill in this blank with something. What are you trying to accomplish when you're going from sim to live money so you know you're ready to make that transition? Is it to start making a lot of money? So in other words, if you're going to go from sim to live, you got to start making a lot of money? That's the key? Do the same as in sim, become profitable, no losses, keep calm. Keep calm, I love it. That's a good one, Sebastian. 2,000 a day. So yeah, it's all those things. But one of the main things you want to try to do is you want to get to a point where you are at least breaking even. Most people don't talk about that, but that's one of the goals. So one of the first goals is that, but instrument selection is key. So what do I mean by that? Well, if you looked at different instruments, you know that they all have different personalities. For instance, I'm going to show you a NASDAQ chart and a YM chart and a Russell chart, and you're going to see that the volatility on those instruments is very different than ES, or it's close to it. But ES will tend to respect swing levels, whereas, you know, like if this retracement right here, for instance, on ES, see how it's holding the midband? See it? Now, I would bet money if I looked at this exact same time on those other instruments, you'd see them coming way down into here, way deep retracements. Now, look, if you're comfortable with that, because the depths of their moves and volatility can be 2 to 3 times that. So if you get a 20 tick run on ES, on the other markets, it might be 60 or 80. Okay, but you got to realize this one's $12.50 a tick, and those are $5 a tick. So that's how it makes up for it. But yeah, you just want to get to break even. You want to stop losing, and you want to get your win rate up. You want to achieve a high win rate. Oops. What do I mean by win rate? What am I talking about? What is a win rate? What am I talking about? Win rate. Is that like interest rates? Is that like you borrow money and you get a certain win rate? What is a win rate? What am I talking about? Ratios of wins to losses. Right. You want 8 or 9 wins out of 10 trades. Exactly. You want to get a high win rate. So in other words, you want, you know, for every 10 trades, you'd like to try to get ideally to a point where you're getting like 6, 7, 8, or even 9 of those are winners. And your losers, maybe there's 1 or 2 losers out of 10, but they're really small. Maybe they're only a few ticks. Now, in order to get a high win rate and start to break even so you're not losing any money, what do we have to do? What is in terms of all the stuff we can learn, what's probably one of the most important near the top? If I had to type something into this line, if you were going to learn one thing first, this would be like the first thing you would try to really nail and get good at. What would be on this blank line here? What would we fill that in with? Think about it for a second. What does all trades, doesn't matter what instrument it is or whatever you do, start with what? All trades start with what? When you take a trade, you have to do this. Pray. Gene, you're funny tonight. Say your prayers. Proper entries. A lot of you typing in stops. Stops are important, but you can't have a stop unless you have a what? An entry. Right? Everything flows from the entry. The entry is critical. Proper entry. I like that. That's good. Yes. I'm going to put some stars around this because, you know, you all know if you've been trading futures that if you get a bad entry, you're fighting it from there. You know, it can all go down there. If you get in late, sometimes you get in too early, you stop out, and then it moves in your favor. Proper entry is critical. In fact, I would go so far as to say is critical. If you wanted to focus on, let's assume that you get this all down, you're starting to get your win rate up. You know, you figured out what instrument you like, whether it's crude, gold, ES, whatever this is. So you're starting to sort this out because these are intertwined. So instrument selection, becoming profitable, a high win rate, and getting good proper entries are all intertwined with each other. I know traders, for instance, they'll say, you know, Charles, look, I understand. I've been to a million webinars. I know how I see mid-band trades in my sleep. But for some reason, I just go into this instrument and I get hammered every morning. I just don't understand it. And then I say, well, what are you trading? NASDAQ. Well, what else you trading? Well, sometimes I'll look at the Russell. And I'll say, why did you pick those? Those are like the hardest instruments of all futures to trade. Why did you? Well, I thought I could make a lot of money doing those. So anyway, the point I'm trying to make is we're going to spend a lot of time tonight talking about proper entries right here. This is going to be a lot of our focus. So let's put something else down here, and then we'll get straight away to trades. When you look at what we do in terms of our entries, and this is where a lot of people get confused, and it's perfectly okay, I understand it, but at a very high level, this is how it works. We mainly teach 3, and you'll hear these in the room, types of trade entries, okay? And so let's talk about what they are. My strong suggestion to you is the most effective and easily learned trade entry type is a mid-band trade entry. Okay, mid-band trade entry. Next one we have is what's called minimum criteria. And the third one is called deep retracement, and sometimes also referred to in the room as slash. What does Gary call that? What's that? What does he call deep retracements again? It's not probes. We used to call them deep probes. Phantoms. There you go. Phantom. Okay. Now, you can certainly learn all 3 different types. And I think eventually your goal as you mature in your trading career want to have all these tools in your tool chest. We get all these in your quiver of arrows, so to speak, to trade, because this gives you the maximum ability to handle any type of trade set that's a trade that comes along, right? But for the purpose of getting started and to keep it as simple as possible, I would strongly urge you to look for these. And that's the focus of tonight's webinar, and that's why we picked that. That's why that's so critical, that you learn that first, and then everything else can flow from that. If you can master the mid-band trade entry, that's going to create a lot of opportunity for you. Now, the mid-band trade entry works best, and let me just put a little caveat on here, is that you need a trend. They're most effective when you have a trend. So that's really important. They don't work so well in range-bound markets, okay, just to let you know. Mid-band trades really, in fact, a lot of times you probably don't even want to use a mid-band in a range, especially if the range and the mid-band's in the middle and it's a small, tight range. And we'll look at that. Let me just take this thing off of here. Why is this not cooperating with me? Stand by. So with that being said, if you're going to find a mid-band trade, then what's the first step to do it? Do you just go in and put like an order on a mid-band? What would you need? What would be the first step then to find a mid-band trade? Do you just put buy orders on mid-bands and see if they get filled? We have to figure out what first. Okay, look at the rectangle box here. What does that say? Mid-band trade entry, but you need to have what in order to get it? A trend. So then wouldn't the first thing be to figure out what the trend is? Maybe we would start there. What do you think? So in order to get a mid-band trade, we got to figure out what the trend is. Yeah. So that's how we start. So let's start real simple. How about this area right here on ES? Is this an uptrend or a downtrend in this area right here? Where my cursor is. From, here all the way over to here. Just U for up, D for down. Uptrend or a downtrend. Right through here. By the way, I'm not going to give a lot of time we have a lot of material to cover in a short span of time. So normally I'm only going to give you about like 2 to 3 seconds to answer. Because what we want to do is we want to hone your skills so that when you look at a chart, like when you fire up a chart in the morning, say you're going to trade ES, okay, and you're looking at the ES chart, and the first thing you're going to try to figure out, is it up or down or sideways? So that's the 3 ways it can go, right? Go up, go down, go sideways. So what you're looking at is we're connected to a data feed from our broker, NinjaTrader, and we have 4 range bars, which are 4 ticks each. And so when you're in an uptrend, the background is solid green. Bars are predominantly blue. The midband and all the bands around it are stair-stepping up, like such. And you're getting a series of higher highs and higher lows. That is the definition of an uptrend. Now, conceptually speaking, and practically speaking, we are what you call retracement traders. So when you have a trend, you have this notion of what's called the thrust part of the move in the direction of the trend. Let's look at some examples to the left. Here would be a good example of a thrusting move because it's up and you're in an uptrend. So the thrust corresponds to the direction of the trend itself, yes? So then a retracement by definition would be the other direction, which would be pulling back into a support level, like such. Now, if we blow this up, let me see if I can figure out a way to really blow this up really a lot so everybody get really clear on what I'm talking about, because there seems to be some ambiguity and a lot of questions around this. A mid-band trade is defined as follows. It is bars on the chart that come into this area right here. So it's the band directly above the thick line, which is the midband, the band directly below the thick line, which is the midband, or bars that sit actually directly right on the midband itself. That is the definition of a midband trade. So let me ask you a question. Now with this newfound knowledge that you have, is this a midband trade with these bars right here, yes or no? The bars right here, yes or no? 2 seconds. 1 second. Cast your vote. Time's up. Yes. Yeah, these bars are sitting, in fact, this bar wicked the midband itself. These bars are sitting in the band directly above the midband, and by definition, of course, that is a beautiful textbook midband trade. Now, how about these bars to the right? What about over here? Is that a midband trade too? 3 seconds. Two seconds. Yes, just a yes or no. Why? Boop. And no. Boop. 1 second. Half a second. Yes. So these are examples of long trades, long midband trades in an uptrend. Okay? Now, let's see if we can find some short midband trades in a downtrend. Okay, hold on a second. Let me see if I can go out here and find a downtrend. Stand by. Give me 1 second here. It's hard to find because, all right, okay, I think I'm ready. Okay, so from this point forward, is this market going up or down? From this line, I'm going to put on the chart right about here. Up or down? What direction is the market going when you look to the right of the line? Just a U or a P? Or yeah, U or a D, right? U for up, D for down. 2 seconds. 1 second. Up or down? I mean, this is stuff you got to figure out, right? I mean, this is like we said. This is like the #1 thing you do when you fire up your charts and you start thinking about trading in the morning, afternoon, night, whenever you trade. This is the absolute first thing that I do every morning, is I try to determine what the trend is. Good. Down. Now let's define a short, and just like which is a mere reverse image of the long trade setup. In the case of the short, the thrust move is in the down direction, right, in the direction of the trend. And we can see over here that the mid-band and all the bands are stair-stepping down. So we have, by definition, a down trend. So if we want to keep with the same situation as far as a definition of a mid-band entry, then we would say that it would look like this. It would be in the band directly above and below the mid-band, just like the short. I mean, the long trade setup in the uptrend, right? Or bands or bars that sit right on the actual mid-band itself, right? And so we're looking for retracements or pullbacks into this sweet spot of an area. So now that you know the definition of it, is this bar, these bars right here, is that a mid-band trade? Yes or no? Right here. Is that a mid-band trade? Yes or no? Now, this is new for some of you. I see a lot of people coming in late. Don't worry, we'll post this tomorrow for you late birds. If you missed half or some or all of it, or you got to leave early, don't worry about it. We'll got you covered. We'll post this in the member room, member area, as well as on the live site itself for you to come and download and watch it. So we got you covered. Well, you know, this is kind of a tricky one. Ideally, we want to see bars coming up into this area right here. Let's look and see if we could find a better one. Okay? This would tend to be more of a minimum criteria. So minimum criteria in the case of the downtrend would be coming into this area right here above line 2 and above the stealth line. So that's more of sort of a minimum criteria trade. It just wicks a little bit into here. You know, I guess you could try to make the case that the tips of these bars sort of make it a little bit of a, but in actuality, it's a minimum criteria. It's only come up above stealth and line 2, and so it meets that for the minimum criteria. But that's not what we're looking for. So the answer is no. A deep retracement or probe in the downward direction would take the bars all the way up into here. And so we're not going to talk about that tonight either. We'll spend time next week on that. So we're just focused right here. So let's advance the chart. Let's do a little exercise together. Let's reconstruct. This is the morning of the 8th, so it's a couple days ago. And this is in the overnight session, so we are going into the Asian session. And I'm going to go ahead and advance the chart. And when you think you see a mid-band short, we're only looking for mid-band shorts, you type in the letter S. Now that we're all experts, right? Okay, here we go. Starting to look for mid-band trades. Well, right now it's 1649, so that is 449. The Asian session's just getting ready to start right here. All right. Okay, we're looking at ES. Okay, looking for mid-band trades, and when you think you see one, you type in the letter S. Okay, we're at 1819, which would be, let's see, 12, 619. So we're about an hour into the Asian trading session. We're looking for mid-band short entries. You type in the letter S when you think you see one. Okay. All right, here we go. Okay, looking for mid-band trades on the short side. There's 20, so that's 8:49 my time, Pacific. Just relate that to your time zone. All right. Okay, I'm going to stop it there. How many of you saw it? Looks to be about half the room. By the way, welcome everybody, since some more late birds coming in here. And if you're looking at this for the first time and you're not really clear what we're talking about, don't worry about it. It takes a while to learn this. What we're trying to do is just cover the basics, right? We're just trying to cover the basics. So you get a flavor for how we do this. So would you not agree that the bars that are right here are in fact a combination of sitting below, sitting above, and a few of them are right on the mid-band itself, yes? I'll get to that, Neil. Yeah, we got to walk before we can run. We'll talk about entries in a minute. I mean, it's hard to find the reason I take this in this direction is because a lot of times what I find is that traders want to, and I understand, look, you're entrepreneurial. That's the nature of being a trader. You want to get the things quick. You want to figure out how to do it. I understand. Look, I've been there 20 years ago. I was in the same spot. I know. But you got to get the fundamentals down. You can't put the roof on your house until the foundation and the walls are built. So what we're doing is we're building the foundation and the walls. And the roof will be the trade entry. So you can't really have a trade entry unless you know where the trade you're going to take and how it's going to look. Okay, now that we're so good in short mid-bands, let's look for another one together. You think you got it? You got what it takes? All right, okay, no problem. Let's do another one together. Here we go. That was a little tricky, David. I'll explain how to deal with that in a minute. Let's just get the entries down first. Let's get the entries down. All right, here we go. We're going to do the exercise again. We have just crossed over midnight into the morning of the 10th. Right here. So now we're transitioning from the Asian session into the beginning of the European session. Okay, let's look for short mid-band entries together in the European session. Here we go. Okay, we're about an hour in. European session. Trend is still down. I'll help you out. We're looking for shorts on or around the mid-band. Okay, there's 056. Almost an hour into the trading, European trading session. Trend is still down. There's 1 o'clock. Type in an S when you think you see a mid-band short entry. Okay, there's 1:30. Hour and a half into Europe. Okay, now we're coming up to 2 o'clock. Let me blow this up a little bit. See, there's 2:11 a.m. Pacific time, 2 hours into the European trading session, looking for mid-band shorts on ES. Mid-band short entries. So there again, there's 2 o'clock right there. Kind of looking a little bit like that 2150 is holding pretty good right there. Tried to break it 3-4 times, couldn't do it. Okay, remember we're looking for retracements on or around the mid-band to take shorts, and you're going to type in an S when you think you got a juicy one. Okay, there's 216. 216. All right, moving forward. Okay, there's 248, 230 a.m. Pacific. All right, I'm going to stop it right there. I need to say two things. First of all, I think and we've tried to explain this as best that we can, is that when you're in a downtrend, obviously you can see that's the thrust part right there. And so you got to fight the tendency. If you start looking at a market and the market is sitting down here near the lows, the FOMO, fear of missing out, takes over, and you want to push the sell key and get in, but you got to fight that. You got to fight that because the trade was up here. So what happens is people who are market participants who are short from higher levels, they're going to start to buy to cover. And when they do, it creates a natural updraft from the buying to cover. And so it tends to push it up like that. Now, can you tell me where the location of these bars right here is? Is that a mid-band trade, yes or no? Right there, these bars right here. Yes, absolutely. Let's go back to our definition of it over here. Wasn't that our definition right here, remember? Minimum criteria, mid-band, deep retracement phantom trade up here. So these bars right here, these two are actually sitting physically right on the mid-band itself. Right? Now, the challenge, so at a high level, you might be saying to yourself, well, you know what, Mr. Charles, man, this looks pretty simple to me. Are you telling me that all I got to do is wait for a few bars to hit that mid-band and I go ahead in the trend and take it short and make money? Well, yes. That's exactly what we're saying. However, what's going to complicate things? I mean, if it was literally that simple, wouldn't like everybody in the world, including like 4-year-olds, come in and start making a gazillion dollars getting long and short in the futures markets? Why isn't everybody doing that? What complicates it? What is the difference between this mid-band trade here and the setup on this mid-band trade right here? Are they created equal? Do they look the same? What is different about them? Here versus here. Well, how about let's talk about level of complexity. Would you not agree that this setup is much more complicated than this setup right here? And therein lies the rub, doesn't it? What we're trying to say a little bit, and this might sound silly in the analogy, but it's somewhat true if you think about it, is that trades are like snowflakes in the fact that almost never are they created equal. It's rare to see them the same type of exact setup happen in the same day. So what we're saying is that we understand where we're getting in, but the practical execution of it with the variance in the number of bars and where they're sitting and where they actually go is where the secret sauce. That's the secret sauce, is being able to figure that out. And guess how you do that? With lots and lots of screen time and lots of practice. Because what you have to do is you have to learn all these different patterns that set up around the midband. So before we move on to other things, I want to talk about the sequence of events in order for you to take a trade. I want to summarize that, and then we're going to move on and look at some other instruments because I've already blown through half of the thing here, and I don't want to do that. So I need to do a quick summary. All right, I'm going to type in 1, 2, 3, 4 in terms of. Okay, so going back, making sure we're all on the same page. Number one is, what do we do? What do I put in here? What was the number one thing we're doing when we get up and we start looking at a chart? Any chart. Good. Trend. And by the way, let me do this. Let me back up for a second. I don't want to confuse anybody. I'm going to assume, and this is before we talk about the trade entry itself. Let's assume that you have picked an instrument. Let's just assume. Let's not start with that. An instrument to trade. Okay, let's take that off the table right away here. Okay, that's that. You got that down. You know what you're going to trade. You got the chart up. Okay, now we start and we say, okay. We said earlier that you don't know what trade to take unless you know what the trend is. So trend is number one. Determine. I think you're really off today. Determine the trend or lack thereof, right? What's next? Well, yeah, the lack of the trend would mean range bound or sideways, right? So the lack of a trend would be range bound or sideways. Yeah, exactly. Okay. All right. So we have number one. We've picked our instrument. We got the chart up. We look at it. It's a downtrend. Now what do we do? What's next? Okay, proper entry. Now, can we be more specific? Okay, I see some answers coming in here. So let's think about our entry. Are we entering on thrusts parts of the move, like we showed here, or are we entering on retracement parts of the move? So what do we got to figure out next when we look at the chart? We determine the trend. We know that. Let's use this as an example. Of course, it's down. We know we're trading ES, but that's clear. So you got to determine whether, don't you have to figure out if you're in a thrust or a retracement? Would that be next? Yeah, good. Okay, good. Yeah. So we have to determine, when you start looking at the chart, if that market or instrument is in the thrust, thrust or retracement part of the move. Good. Okay, now 3, let's suppose that we have determined that in the downtrend we start looking at the market. Let me get some of this stuff off of here so we can look at something here. Let's do a little exercise together. Is everybody cool with this? Can I clean this chart off now? Can I get rid of all of some of this stuff? Can I take some of these off right here? Let's do this real quick, and then I want to get on to gold. Okay, stand by. I'm going to clean this up, and I'm going to show something. I'm going to do a quick another exercise, and then we'll move on. All right, if you get up and you look at a market, and it looks like this, I'm going to do a couple of these with you because this is really important. This is really, really super important. The 3 things that I'm showing you here are the keys to your success. If you're wanting to learn how to make money trading futures, I'm handing you the keys with these items right here. Right here, you wake up tomorrow morning and ES looks like that. Are you in the thrust or the retracement? Three seconds. T, thrust, R, retracement. 2 seconds. Right there, those bars that I'm pointing to, right there. T, thrust, R, retracement. 1 second. See if you can figure it out. Time's almost up. Time's up. T, thrust. Now, why do we say that? Well, let's look at the condition. Clearly, we can see that we ended the downtrend move here. When you look at the chart, when you start looking at charts, you'll get a good sense of how this works, right? And so here was the apex of the sell-off right here. We come up, we break the swing, we break the midband, we come back, we hold the midband at a higher level of support, and then we thrust up like such through prior resistance levels here and here, and we turn the background green. We have predominantly blue bars, and the midband and all the bands are stair-stepping up. We have all the characteristics of an uptrend here. And so when you are thrusting, here's a good rule of thumb. Here's a good rule of thumb. Let me give you a little tip. If you are in an uptrend and you are in the thrust part of the move, would you not agree that the bars should mainly be staying above the stealth line and line 2? Does that help? If you're in an uptrend, as the trend is unfolding in the thrust direction, should the bars not stay above the green stealth line and line 2? And of course the answer is yes, right? Let's play that out. Let's show how that worked. You tell me when you think you see a retracement. Here we go. Okay, is it still thrusting? How do we know? How do you know if it's still thrusting? Well, what was our definition of a thrust in an uptrend? What was it going to stay above? So is it staying above those 2 things? Stealth and line 2? Is it staying above those? Yeah. Stealth and line 2, isn't it? See all the way up here? See it? So while you're above those in the uptrend, you are said to be thrusting, right? I'm sorry, line 6. Yeah, the green, you're right, Neil. Line 6 is the green line, and the sneaky snake sort of green line following it right behind is called a stealth indicator, right? All right, when will we stop going above there? Okay, we're still above it, right? Let's follow it up. We following it up. Oops, where's my little thing here? There we go. Okay, following it up, following it up. Oops. Following it up, still going up. Uh-oh, what's starting to happen here? What's going on with those bars right there? What do you think about that? Is that going to be a problem? So let me ask you a question. With those bars right there, what might be starting to happen? I'm talking about these bars right here. What about those bars right there? What's going on? Now look at the thrust move here. Let me just continue our arrow up so you can envision what I'm talking about. Oops. Now, in this whole thrusting move up, have the bars ever come and breached through the green thin line 6 or the stealth line in the whole thrusting move up? Has that ever happened once? No. Okay. Well, let me show you a couple more bars. Okay. How about those? What's going on with those right here? These bars. What's going on with those bars? Oh my goodness, what's starting to happen? What's starting to happen right here? What is this? What is that? What is that? What is that doing? What is that? Is that? Are we thrusting still? Let me ask it that way. Is this that I'm showing with my arrow bars? Am I showing? Are we still thrusting in your opinion, or has something changed right here? I don't see anybody saying we're still thrusting with these bars right here. So here's another thing that's going to help you a lot as you try to do this and figure this out. When you look at the bars that are in the thrusting direction, what primary direction are they closing, up or down? The vast majority of the bars in this direction, are they closing up or down? And when you're doing this, and you're staying above stealth and line 6, are they primarily? Now there's a few closing down. I'll give you that. I'll give you there's a few sprinkled in there. Okay, that close down. There's a couple here and there, but the primary close direction of the bars is what? Up. Good. Let's go back over here. When you're in a downtrend and it's trending and thrusting, what's the primary close direction over here? And by the way, the converse is true on the downtrend move in the fact that you're staying under line 2, the skinny little red line at the top of band 2 here, and the sneaky snake red line. Aren't you? And what close direction in a downtrend is the thrust? What direction are the bars mainly closing down here, like this? What do you think? What are they doing? In the downtrend, the primary direction when they're thrusting is closing down, right? Down. They're closing down. That's correct. And in the thrust direction, in the downtrend, they are staying below the stealth line and line 2, like such. See? Okay, pop quiz. Make sure you're awake. Let me ask you a question here. Okay, is this a mid-band trade? Yes or no? 3 seconds. It's to wire and end. Boop. You should know right now by now. Is that a mid-band trade? Yes or no? 2 seconds. Boop. Yes. You should instantly start to know these. You got. That's the way you get your trader mindset, right? Trader mind's got to be set. You see something, boom, you know it. It's like breathing. It's like blinking. You don't think about blinking, do you? I don't think about that. You just do it. That box, 1 second. Mid-band trade, yes or no? Almost out of time. Time's up. No. We know that to get a mid-band trade, you've got to get up here. Good. Everybody got that right. Good. Good, good, good. All right. So now do we know the difference between a thrust and retracement? Let's look at the retracement once again on the downtrend. When you look at the primary close direction when the market is retracing, what is it? In the retracement in the downtrend, when it's going back to the midband, what direction are the bars closing? Are they closing in the direction of the trend or opposite of that in here? The primary, there's a couple sprinkled in that are different, but yeah, they're closing up in the retracement, right? Good. Let's go back over here then and reiterate the long trend situation. This is really important. This is really critical to your success. So we said in the thrusting part of the uptrend, the bars are primarily closing up, and they're staying above line 6 in stealth, and they're blue, right? And then when they're retracing in the uptrend trend direction, they start to close down, and they put in a normally some kind of swing high here, and then it comes and it breaks through line 6 and stealth, starts to close below there, and the primary direction of the retracement is down. Now you tell me when this retracement starts to turn around and head the other direction. Let's do it in the long side first. In fact, we're going to do it like this. Would you say it was bar A? Bar B? Or bar C? Type in the letter that you think that the retracement is halted or reversed, and now the resumption of the buying in the uptrend has resumed. Is it on bar A, bar B, or bar C? Three seconds. Just type in a letter. Where does the retracement stop and now the buying resumes and you start to go up again? Bar A, bar B, or bar C? Let's think about it for a second. Think about it intuitively. We said that in an uptrend, when the market is thrusting in the trend direction, that the bars are closing up. We said that. We're clear about that, right? And we said that in the retracement, which is in the opposite direction of the trend, which is now retracing downward into support, that the bars have started to close down primarily. So then, in order for the reversal to occur, and we know to start looking to get long and take the trade, what would need to happen in our opportunity zone, which is the bands directly above and on the midband itself here. So this is the sweet spot of the opportunity zone where we're looking to get long, and the bars have encroached and come into it, yes? So what that means is our spidey sense is up, and we're starting to look for a trade setup now because it's entered the sweet spot of where we're looking to get long. So we're looking for bars to then start reversing and going which direction? Up again, right? They should start going up. They should bounce and start going up again because that's the trend, is up, right? So which bar starts to close up? A, B, or C? What's the first bar in this configuration that actually closes up of the three bars? Now that you know that, it's B. Could you take a trade on B? Yes. Would that be a good early entry? Yes. Is C a good follow-up up bar to B? Yes. Could you get long on C? Of course. If you didn't want to take that, could you right-click and put a buy limit order right here? Let me make sure I'm in Sim so I don't get live trades going. There we go. All right. Could you do this? Could you take a object trader region box and engulf these candles like such and be filled on the close of that bar long right there on a market order? Yes. Would that be a great trade entry? Of course. Could you also put a limit or buy order in here like this, right above here? Yes. So the difference between a box and a buy limit order at the top of this candle is that when the market comes through this buy order, you're filled at 37.50. In the case of the bar close outside of the object trader box, you're filled long on the close of this bar. So it's it's going to be a few ticks later. They're both good entries, and they're both valid and sound entries. It really depends on whether you like the OT tool. If you like the OT tool and there's plenty of time to draw the box, then do that, because it's going to put your targets and stops and manage the trail and handle all that for you. Well, you wouldn't know it closes up until it closes up. But what I'm trying to impress upon you is, when a market is starting to retrace and it's dinking around up here, do you really need to focus on what's going on? No, not really. I mean, other than the fact that you're starting to anticipate that this trade setup is coming, possibly. And when these bars start to come into here, now your spidey sense is up. In other words, what I'm saying is that when bars get at or around a midband and you are in a trend, you've got to perk up and pay attention to what's going on, because this is an imminent trade setup coming right there. And I got a lot of comments when we started off, there's people saying, well, I get in late and I miss the entry and I'm chasing it and I get stopped out and I'm always getting in, and people are getting scalp trades and I'm just getting in. This is the reason why. You have to hone your skills to learn this price pattern setup when the market is in the sweet spot for a mid-band trade entry. If you don't, they're going to pass you by. And what's going to happen is you're going to get in late and you're going to get filled way up here where people are taking profits already, right? And then what's going to happen? You're going to stop out, only to find out that the market comes right back to where you got in. We're not talking about minimum criteria here. We're not talking about that. We're talking about mid-band trades only. We're not talking about that. You don't care about this. When you're taking mid-band trades only, you don't care about this. You don't care about that, and you don't care about deep retracements. And the reason I'm telling you that, there's a reason. I'm not disparaging those trade entries. They're valid, sound, and on strong trends, they can work really well. So just don't write them off. What I'm telling you is that they're a much more complex entry type. They're harder to take. They're harder to see. And if you want to get beat up, that's the first way to do it, is start trying to take all kind of fancy trade setups, and then you get all whack-a-mole, and then you give up. You don't want to do that. You got to start from the basics of the foundation and learn one thing first and then become an expert at it. If you can do that one simple thing with all the things I've shown you, you will start to make money. Now, look, having said that, you're going to hear all sorts of trades in the live room, right? We have traders all over the world, literally hundreds of traders all over the world coming in our live room, and they're looking for all sorts of trades on all kind of different instruments. So we have to call those out. But does that mean you have to take it? So tomorrow morning, let's say, for instance, somebody says something like, hey, look at that ES. There's a minimum criteria. Or, hey, look at that crude, whatever. There's a deep retracement setting up way down in here, and you're not comfortable with those setups, and you're looking for mid-band trades only. Do you take those trades? Do you take that deep retracement trade call? Do you take it? No. You ignore it. That's what I'm trying to say to you. I think what I've seen over the years is that people you bite too much off too fast, and you're trying to learn all these, trade entry types, and you get confused when the market starts pulling back. Should I get in? Am I getting out? Am I getting long? Am I late? Was that a deep? What was that? You got to focus. You got to focus on one thing and just become an expert at that. And I would submit to you one other thing. The simplest way to do this is when you learn to get these mid-band trades, in the beginning, don't worry about the runners and don't worry about all those trail stops and getting all this kind of thing. Okay? In the case of this long trade here, when you take this at the mid-band, wherever you get in, what is your goal? Where do you want to get back to? Here, let's go reconstruct this. And I'll do it on the short side too. When you take this trade down here, where do you want the market to go back to? And this is the simplest trade in the world. If you're going to learn anything, this is the number one thing to learn, because you can build on this. Back to the swing high or a scalp trade of 10 ticks. Right. Yes. So you wanted to get the minimum goal we want to see, and it doesn't always work, but most times it does in a good trend, is you want to see that market get right back up to here. Can you see the swing up here, just shy of 42? Now in this case, you're probably looking at about 10 ticks, maybe 8. Let's say you're filled on one of these bars here, using around number 37, and the swing is actually here at 41.25. Now you're not going to put your target right here. You're getting long here, and you want to sell up here. So you're going to have a sell order to take profits right here. You're going to fade that by at least 2 ticks. Can you see that? The swing is at 41.25, but your target's going to be 2 or 3 ticks under it. So what I'm showing you is you're going to be filled long here, and you want to get out here. This trade is 37 to 40 and a half, which is 37, 3.5 times 4 is 14 ticks. 14 ticks. So what's 14 ticks worth? Well, what's 3.5 times 150? Or 3.5 times 50. So ES long. Plus 3.5 points, or 14 ticks. How many dollars is that worth if you put one contract on that? Equals what? Well, how much is ES worth a point? Does anybody remember what that is? How much is that a point? What's 3.5? 3.5 times what will give you what? Or 14 times what per tick? If I'm going to put a number on this. $12.50, $50 a tick, 4 ticks per point would put you right at $175, right? Now you might say, look, Charles, I can't make a living at $170. Less commission? Are you kidding me? I can't make anything on that. I can't even buy a nice dinner out for that. Well, let's do a little math together. Hold on. What if we want 2 lot? How much would that be? What would 2 lot be worth? $350. What about 3? What would a 3 lot be worth? Anybody got a calculator handy? What's 3 times 175? I used to be, when I was younger, I was better at that. I need to get my slide rule out now. 5 1/4? How about a 4 lot? 4 lot is 7 bones, right? 7 bones even. You get the idea. I'm not going to keep going here, but so what I'm trying to impress upon you is that you don't need to take a lot of trades. You don't. You really don't. In fact, I would submit to you that you can make money every day with a high win rate on only taking 1 or 2 trades every morning. That's it. You should limit yourself to that. 3 should be a busy day for you. 3 trades would be a busy day. In fact, I've had suggested this, and a lot of traders do it as they're learning, is you take 3 quarters and you put them on your desk. Those represent the trades that you're going to take. And every time you take one, you take a quarter away. Or maybe you want to restrict yourself to 2. It's a good reminder. 2 quarters. Boom, boom. There they are. Take 1 trade. Maybe it's a small loser. You lose a couple ticks. So then you double up. You had one. You lost I don't know, 4 ticks on a 1 lot. Okay, so you're down $50. Take a coin away, right? So you say, okay, I'm going to look for a better setup. Take my time. We're in an uptrend. I'm looking for a long. I'll go 2 lot. Then you nail one for 15 ticks. So you made back your loss, and you net maybe $300, right? So it's a principle about getting very, very good at the trades you're going to take and then doing them over and over and over again. And eventually where big money is made, I'm telling you, in futures markets, trading futures markets, the big money is made in leverage. Leverage. You're going to start putting more contracts on as you get better. And you got to stay focused. I would really suggest you don't look at more than 1 or 2 charts. Pick 1 or 2 charts to trade and become experts in that. Just like Gary is with crude. How many times do you see Gary lose money on a crude trade? It's pretty rare. I've been trading with the guy for 10 years. And I'm telling you, he has mastered crude oil because he looks at it every single morning for 10 years. You think you'd notice the price patterns after that long as looking at charts? Right? That's what I'm talking about. Crude's another one good to learn, especially if you're going to trade with Gary. So yeah, you can just write off the fact that this was a 14-tick winner. But when you start saying to yourself, well, wait a minute, I could put 2 or 3 or 4 lot and I'll start making some serious money. Well, you know what? I'll tell you what. Here's the thing. I'm getting some good feedback from Brent, and I want to share this, and then we're going to wrap. Um, we have introduced more recently the whole concept of inverse relationships between gold and the equities. And we've also shown other indicators like the swing high-low of the day. And we've also, in some charts, introduced the whole idea of notion of volume up-down. The reason we've shown these other things to you and the correlations is the idea is to help you, see market correlations or see when they're not working. And if gold's going up and equities are going down, then you trade the short and the long respectively. But if that's not helping you, and for some reason those extra indicators and the correlations are not helping and actually hurting you from seeing and taking trades, then don't use them. Okay? Don't use them. That's an easy solution. If you're trading ES and you look at a gold chart and it's not doing what it's supposed to do, and you miss a good ES chart because you're waiting for gold to roll over, well, then get rid of the gold chart. Problem solved. I mean, the whole idea of having these tools is to have the most optimal condition where you can see and take great trades over and over again. And if there's something in there that is not conducive to that and harming you and holding you back, then you got to eliminate those hurdles. Okay, Brent? Yeah, just focus on the chart you're trading. Yeah, just focus on if the correlations aren't working for you, then get rid of that. Okay? All right, good deal. Yeah. Any other questions? I'm going to turn off the recorder.